Hey everybody, welcome to Strategication Lesson 5. In this lesson, we are going to cover targets and profit taking, what is magnitude, and exhaustion risk. So targets, why do we have them? Well, it's important in any trading plan that you have your entry, your stop, and a target. Targets are also typically where we're looking for pivot highs and pivot lows as our main targets when we get into the price action. And those levels are typically where smart money takes their profit and dumb money likes to get in. And most of the time when we hit these targets, that's when you'll see some sort of reaction from the price or some sort of hesitation in the speed in which it gets there. And a lot of times you will see reversals happen after important pivot targets have been taken out. So if you are in a long trade and a target is hit, you'll tend to see a reversal happen where price turns around and goes the other way. Or if you're short, once the downside target is hit, you'll sort of see some bounce or reaction up after the target's been hit, because that's where people are taking their profit. Before we get into real charts, I just want to quickly cover what is magnitude. And magnitude is pretty simple. It's just the distance from your entry to your target. So basically your profit potential. And this is going to come into play in the later lesson when we start to talk about how to calculate your risk reward. Okay, so in this example, I am using the SPX 2-hour chart. The time frame is not important. What's important on any time frame is knowing where the pivot highs are and the pivot lows are, because again, price wants to gravitate towards those to generate liquidity, and people like to call these stop hunts, but we know better. So in this example, we're first going to start with this price action right here. You have a shooter. So your actionable signal is a break below that shooter. And your target is going to be this pivot low. So smart money are short and they get out here at their target. Dumb money or retail traders are taught to short a break of support. And you can see how this works out for people who short at the lows. So this is where smart money and us are exiting our shorts. Once you have made a new low compared to a previous low, that is what we call exhaustion risk. You are now at downside exhaustion risk because you've made a new low. So anybody who was long in here and had their stop at this pivot low is now gone. They got stopped out. So once your targets are hit, that is when you will tend to see reversals in the other direction. So since price hit its target, it is exhausted. This is price exhaustion. So then what? You can look to take a reversal the other way only when you've exhausted to the downside. So you've taken out an important pivot target. Okay, so what's the next setup that this chart offers? This is an inside bar at exhaustion risk. So we know reversals happen at these levels. And again, the main strat targets are always pivot highs. So if this is the actionable signal entry, that's your target 1. That's your target 2. So let's look at this for a second. So when we get in from here, we know we're targeting this pivot high. And look what happened when price reached up into that. It barely tagged it. And then what did it do? It fell and reversed. So we want to be taking profit right at our levels. So again, retail traders are taught to go long on resistance breaks. So if anybody went long right here, they're immediately underwater. This is what we refer to as breakout trading, trying to go long against the previous pivot high. We don't do that. We want to be exiting here. Then when you get really good, like we did down here, you can play both ways. So you could have been short to here, from here to here. Then you flip and go long from here to here. You're exiting here. There would have been a smaller time frame reversal in here that would have told you to go down. But again, we made a new high. Okay, so then what's the next setup? A 2 up followed by a 2 down. What are your targets? A new pivot low. So price made a new pivot low. So now you're exhausted again. Okay. Then what happened? Then you can flip and go long again. You have an inside bar again at the bottom of price exhaustion. Target 1, target 2, target 3. So anybody, again, smart money, we are getting out at the top. In fact, we took this exact trade. Okay, breakout buyers who see a triple top, 1, 2, 3, want to get in when that breaks. Okay, what do you think happened? Do you think price continued to go up and that worked in their favor? No. What did it do? This would have been hard to play because of the gap, but a red 2 up in conflict, what's it coming for? It's coming for this pivot low again. You had all these targets. So when we talk about exhaustion and taking profit at your targets, this is why. Once a pivot high is taken out, you want to be out of your longs. Once a new pivot low is taken out, you want to be out of your shorts. Even right here, you have a 2, 1, 2 down. What's your trigger? 36.28. What's your target? 36.19. If you didn't take profit where you were supposed to and you held on too long, you would have hopefully been stopped out break even because price hit your target. You should have been out. But if not, it went completely against you. And that's all we care to do. We want to be in. We want to be out. We want the highest number of successful trades in our favor. And then we do it all day, every day, over and over and over again. You don't have to get greedy. You don't have to continue to hold. You have the strat in your back pocket. You know where price should go. So let it go there and then take your money. You'll hear me talk a lot about the Missy Elliott, which is kind of a pun or joke based off of her song. I think it's called Work It. But the lyrics are something, something, flip it and reverse it. And that's what we want to do when our target gets hit. We want to take this profit and we could potentially look to play the other way if we get a strat set up. So we were short from here to here. Now we want to be long from here to here. And if you can play both ways, the market is your oyster. There is nothing that you can't do or trade. You could trade the same name over and over in both directions. Okay, so we just covered how exhaustion risk can happen by price when we hit our targets and we make new pivot lows or new pivot highs. There is another kind of exhaustion that I want to talk about, which is time exhaustion. So if I'm playing a 1 hour strat setup, I want it to trigger with the most time left in that hour, because I know that there's going to be a full hour potentially worth of selling. So I want to get in with the most amount of time left. So say this is a 1 hour chart and price triggers right here, but maybe there's only 10 minutes left in the hour. It's probably not a high probability setup, and you may just want to skip it because time matters. Another example, if you have a weekly setup and it triggers with only 1 day left in the week, you're most likely not going to hit your weekly target. You only have 1 day to hit your weekly target as opposed to 5 days. So use time in your favor. And I hope you see why when price hits your target, you want to get out, because it typically does not tend to just keep going down, right? It tends to reverse and go the other way. And we know that people have their stops who are long right here, so they just got taken out. We know people who are short from up here have their stops up here and they just got taken out. But that's not us. We're doing the opposite of that. We're shorting to here, longing to here, and then it's just beautiful. So we don't want to be the dumb money who says, the market makers are stopping me out. No, we know this is going to happen. That is the target, to hit this. That's it. We know this. Okay, here is a daily example. You had a 2 up followed by a 2 down. Your trigger is right here when this day breaks below the previous day's low. Target 1. Do we expect price to come and take out these pivot lows? Yes, we do. So let's see what happened. Okay, so if you were short from here and you knew your major target was these pivot lows, you would exit there when you make new pivot lows, and then look what happened this day. Price instantly shot straight back up. So once you're short from here to here, again, that's when you can look for reversals to go the other way, because we know that this is how price moves. Price comes and takes out pivots and likes to reverse. So the Missy Elliott, and again, this is going to become very important when we start to talk about broadening formations. So let's see if price comes and makes a new high, playing off this 2 down, 2 up reversal if we got one. Let's just mark our lines. And now this is a new pivot high. So we have a new pivot low, and that's a new pivot high. Boom. So again, here you could be at exhaustion to the upside. So then you can look for reversals back down. And you get one only here, because you still have 2 up, 2 up, 2 up, 2 up. Oh, what's this? This is an inside bar at a new high So price could be reversing. We know what we would be targeting, a new pivot low potentially. But nope, it goes out of your favor. So it doesn't always reverse, but if it's going to, we know what it's going to look like. A 2-1-2 down, we want it to continue. It doesn't, you get a strat reversal against you, you would cut it right there. Get out. Because price is obviously not continuing down. So this would have been a small loss. So you would have entered short from 43. Well, actually, this day triggered and went all the way down here. You could have just kept your stop break even after hitting 2 targets. But if you hadn't, you would have cut it at 53. So a $10 move. And that's the thing about the strat. We know if it's going to continue and we know what reversals look like. It's the best thing in the world. Okay. I think that's a wrap for the profit taking lesson. And I will see you guys in the next one.